Alright, good evening ladies. In today's video we're going to be going through Lido token. Now this is a coin that a lot of very intelligent people that I follow in the crypto space are bullish on and have been investing in. So that's why I wanted to do some research on this coin in the first place and try and come up with a price target for this coin in the next bull run. So what exactly is Lido? Let's talk about the protocol and then we can talk about the coin. So the protocol kind of acts as a middleman between people who want to stake Ethereum. So like a normal person who doesn't have 32 Ethereum, because in order to stake Ethereum, you need at least 32 to run a validator node, and you need quite a bit of technical knowledge on top of that. So obviously a lot of people don't want to do that. They would much rather just send their 1 or 2 Ethereum and stake it, or maybe 5 Ethereum or something like that, and stake it with Lido. So on the other end of that, Lido chooses these validators, I think there's about 30 of them at the moment, who validate the transactions, who take that ETH, and both Lido and the validators get a 5% commission of the staking rewards that the person who deposited ETH should be earning. So the huge advantage of this, like for example, if you have 1 Ethereum and you want to go stake it, you can go to lido.fi, you can swap your 1 Ethereum, and in return you get 1 staked Ethereum. Now that staked Ethereum remains in your MetaMask wallet or your Web3 wallet. You can't do it on a centralized exchange, but that 1 Ethereum remains in your wallet, and without you having to do anything, it rebases automatically. So by the time 1 year has passed, I think the APY is about 4% at the moment. So in 1 year's time, you'll have 1.04 staked Ethereum in your wallet, and then you can go back to lido.fi and swap it for 1.04 real Ethereum. So the cool thing about this is you're not only getting the staking rewards from Ethereum very easily and like conveniently for you, you're also getting this token in return, the staked ETH. So if you staked ETH by yourself, like you setting up your own validator, you don't get a token in return for that. Your ETH is staked and there's nothing you can do with it after that. You're just going to earn the interest on it, and that's the end of that. But with Lido, you get this staked ETH in return for your Ethereum that you deposited. And with that staked ETH, because Lido is the most popular platform, you can take it to a number of DeFi platforms. You could take a loan out against it. So a nice degen strategy you could do, you could take a loan against your staked Ethereum, and you could go buy more Ethereum, swap it into staked Ethereum, and repeat that process for as degen as you want to be. Now obviously if the price drops and your collateral of staked Ethereum drops below the US dollars, you're going to get liquidated, but that's something you can do. So there's a lot more functionality you can do with staked Ethereum with that token. So obviously there's some advantages, some huge advantages. Like no one really wants to buy 32 Ethereum and set up their own validator node, and there's huge network effects for Lido, which we'll talk about in a few moments. So that's called a liquid staking derivative, and right now liquid staking derivatives, all of them make up 22% of the entire Ethereum supply. By market cap, that's the amount of liquid stake derivatives there are of Ethereum. Of that 22% of staked Ethereum, Lido makes up 32% of that pie. So Lido has 32% control of the validators. So you might be thinking, oh shit, that's actually pretty centralized. That's 32% that Lido DAO directly controls. Well, if you picked up what I said at the start, it's not Lido DAO who is controlling the validators. They're just kind of the middleman, and there's these other validators who are chosen by Lido DAO. So you might be thinking that's extremely centralized, but if you picked up at the start, it's not Lido DAO doing the validation of the transactions. It's this other group of individuals and companies who are doing the validation, and they're chosen by Lido DAO, and because it's the DAO, this is voted on. So it's everyone who owns the token, the Lido DAO token, who can vote on the new validators. So I think there's 32 or 35 different validators at the moment. So it's not perfectly decentralized, but it's pretty good. So let's talk about some of the positives of Lido DAO. So one of the main drawbacks, one of the things that made me not so interested in it, is that I thought it was just going to be a governance token for the DAO, which is like, even if Lido DAO, which we'll see, is going to be printing hundreds of millions of dollars annually, even if that is the case, how does that accrue value for the token? So if you're betting on Lido DAO token, you're kind of hoping that at some point they're going to do a revenue share. And as we'll see, like a revenue share can be either them buying back Lido DAO tokens and burning them, or probably the more likely option is actually just to distribute some of the Ethereum they earn to the token holders. Obviously, if that is the case, if they're going to eventually do that, which I think there is a good likelihood that that will happen, because who gets to vote on what the future direction of the Lido DAO token is? It's the token holders. So if the token holders can vote on, oh, let's distribute all of this, a huge amount of Ethereum rewards to the token holders, obviously the token holders have a massive incentive to vote that proposal through. So now we'll see how much potentially Lido will be earning in revenue from its 5% cut of the staking rewards in the future. So Lido is becoming more and more popular. It's taking a bigger pie of the liquid staking market. And there are a few other reasons why probably the revenues for Lido are going to grow over the next few years. So firstly, it's kind of a winner takes most market. For example, decentralized apps like DeFi, the first liquid staking derivative coin that they're going to offer functionality for is always going to be staked ETH, because it has such a huge market share. It's already the biggest by a wide margin. So that incentivizes people, like say I want to do liquid staking, staked ETH is the token I can use on the most decentralized apps. On top of that, it's the one that has the most liquidity, so I'll be getting the best prices for that. It's also the one that probably has the least risk, because it's the biggest and it's like the oldest, the most recognized. Are you going to put all your money into some new staking reward platform, or are you going to trust the most established one? You're probably going to go, like if you have a lot of savings in Ethereum and you want to stake it with someone, you're probably going to go with who you perceive to be the safest one, which is probably going to be Lido. The other advantage for Lido is that they have the highest loan to value on Aave, for example. So if you were to take a loan out using liquid staking derivative as collateral, staked ETH will give you the highest loan to value, which means the price will have to fall further for you to be liquidated on that platform. The other thing about Lido is they have very few costs, and as they scale, their costs don't increase with that. For example, the person who's supplying the Ethereum, they pay for all the gas costs, the validators pay for all the validation on the other side. So Lido is just acting as the middleman, and they're getting their 5% cut, but they have no additional expenses as they scale. The other nice thing about Lido, it's probably a little bit safer than other decentralized apps and other protocols. For example, NFT marketplaces have very decentralized exchanges, have very volatile revenues. So like in a bull run, their revenues are going to be off the charts, but then in a bear market, no one's going to be really much less people are going to be buying NFTs, much less people are going to be buying shitcoins, so their revenues are going to plummet. However, like for example, this is Uniswap here, you can see how volatile the revenue has been and how low it is in the bear market. Whereas with Lido, because it's a staking, and you're not going to stop staking just because it's a bear market, most likely, and like your staking percentage isn't going to go up massively in a bull market. It's probably going to remain somewhat constant. So the maximum downside is just the downside of the token price when you're looking in US dollar terms, but the activity is going to remain the same, so there's a little bit less downside risk. There are potential catalysts that will increase Lido's revenue in the future. So firstly, we know that 20% of Ethereum is currently staked, but in the future it's likely that that number is going to keep growing. That's probably the biggest factor in driving the increased revenue for Lido, because 20% isn't a huge amount of Ethereum that's staked. For example, if you're looking at Solana, I think about 60 to 70% of Solana, I think 67% of Solana is staked, whereas Ethereum's only 20%. So that is likely to increase over the coming years, especially as people get more and more trust for Ethereum. So even if Lido keeps the same market share of the total staked Ethereum, if the total staked Ethereum increases, then the pie is growing, so their pie will also be growing. The other main factor that's going to increase the revenue for Lido over the coming years, pretty obvious one, the Ethereum price is probably going to increase over the coming years. So their revenue in US dollars is going to increase because they're taking that 5% cut of the staking rewards. So let's say Ethereum staking, this is very conservative, but let's say Ethereum staking gets to 30%, so it's currently 20%. Over the next 2 years it gets to 30%. I think it will be a good bit higher than this, but I just want to be conservative for this video. This also means that the yield will drop, so I think it's about 4.5%, and it will drop to 4% because if more people are staking, the yield goes down. And let's say liquid staking protocols, instead of being they're 37% now, Imagine they go to 50%, which is also quite a conservative number. And finally, we'll say that Ethereum goes to 10 grand in price, currently 1.5 grand. Let's say it can get to 10 grand in the next bull cycle. What's the kind of revenue that Lido DAO will be taking in? So in that scenario, Lido would be taking in $300 million annually in revenue from that 5% cut of the staking rewards. So we need to work out, is that actually going to outperform Ethereum? Because there's no point investing in Lido DAO if it's pretty much tied to Ethereum, but if it's not going to outperform Ethereum, there's no point investing in it. So Ethereum, in that case, goes from 1,500 to 10,000, so that's like a 7x. So what would Lido DAO's price to earnings ratio need to be? If they're earning $300 million in earnings, what would the price to earnings need to be to actually be better than Ethereum's return? It would need to get up to a $12.6 billion market cap to get a 7x. So that would be a 42 price to sales ratio or price to earnings ratio. So that's a very high price to earnings ratio. But the market may give it, because there's a few reasons why the market may give that kind of price to earnings ratio. Maybe more, maybe less. But because it's recurring revenue, that's much more favorably viewed by investors, something that's recurring revenue rather than something that's paid once by a different customer every month, for example. It's much more easy to track, and generally, like, software businesses that have recurring revenue have much higher multiples than software businesses that don't. That's why pretty much every software business wants to get you on some sort of subscription. So as you can see, that's quite a high price to earnings ratio that Lido DAO would have to hit in order to outperform Ethereum in the next cycle. Some other drawbacks with Lido, in my opinion: the coin itself isn't very decentralized. If you look at the amount of holders, I think it's about 35,000 divided by the market cap. It means the average holder has 53 grand worth of the Lido DAO tokens. So essentially it means that there's a lot of whales in this project who have a lot of tokens, and potentially they could dump those tokens on you. So you kind of usually want a more distributed coin. It has such a high dollar value to token holder because the market cap is quite high at 1.8 billion, even though it's down quite a bit in the last few months, in the last year or so. That's still quite a high market cap, and generally for me, if I'm investing in a coin with like a billion plus in market cap or getting up to 2 billion, I want something that's extremely safe or has really high return potential. But I do think Lido DAO is a relatively safe coin, but definitely the return potential is much lower. So for me, running my own numbers, it does seem quite difficult that Lido will outperform Ethereum, but maybe it will outperform Ethereum by 2x or something. But so I do think this coin is a relatively safe investment. However, I don't think the potential of it outperforming Ethereum is extremely high. Like if there was a high likelihood that it would massively outperform Ethereum, I think this would be a lot more interesting. Now, it is certainly possible. They definitely could do it, and they likely will do very well in the next bull run. Their revenues will go through the roof. But the fact that they don't already have revenue sharing set up is kind of a drawback for me. Okay, granted, this coin is a relatively safe investment, but the return potential is just not huge in my opinion. I think there's coins and investments that you can make that are as safe but have better return profiles. For example, Coinbase, I already did a video on that. I think that's a very much safer investment because you're exposed to the entire crypto market, but it has very, very good upside potential in my opinion. I'll leave a video for that up there. But Lido is not a coin I'm going to be investing in right now. I'll probably have to do a little bit more research on it because there are some extremely smart people like 0xJPEG who provided a lot of the analysis I went through in this video. So I'll link to him down below. And also Degen Spartan is a big fan of this coin. If you know Degen Spartan, one of the OGs in crypto, as well as Kobe himself was one of the advisors or one of the founders of this project and has written extensively about this project. So there are some big brain people behind the project and some big backers investment wise. But for me at this moment, it's just there's not enough potential upside. So I really hope you enjoyed this video. Thank you so much for watching, and I'll catch you in the next one. Cheers.